The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon till 1 p.m., 877-927-6648. Number to call. This is going to be a very interesting day because the Dow has just taken out the left side low of 23,788 in the pattern that I call the lowercase h pattern. We'll see it's got 2 days within which to close above that 23,788. We'll see what happens by Monday. This is not good because it's an acceleration to the downside. My thinking was that we were very close to at least some kind of a bounce, and if based on the VIX index, let me just go to the VIX and I'll show you what I'm looking at. Technical Friday, so let's get a little technical here. VIX.X did not take out the high yesterday of 4 days ago, 50.30. My thinking was that we had kind of used up a lot of what the VIX represents, at least for me, the way I read it, and that probably we would have a rally in the next 2 days or so I was thinking at least by Monday at the latest, and that could have not necessarily huge upside potential, but the potential not to go to the lows, the recent lows, if certain things happen. So, in terms of positioning, we still have two shorts that are doing really well on the downside. We have two longs. I didn't actually even check. Two longs, and most importantly, what we are looking at is the very short-term trade that we had this morning hasn't worked out, and we just added yesterday. We added one of those infrastructure stocks. We'll see if that's going to last. I don't think it has. I put in a very tight stop. So this is now becoming a market that says a couple of things. Based on the VIX index now up 96 cents at 34.42, that the internal low that I've been talking about is probably setting up as we speak. Maybe it takes a few days, but there's some kind of internal low. And then there should be some kind of a rally. And that rally is going to be very specific. It's going to be very detail-oriented. In other words, not sector-oriented, but more specific stocks that have actually held up quite well could have a pretty good rebound. But the tide is really what we're looking at. So let me run this through because it's enough with the dailies. We know that all the dailies are actually in sell modes. Let's forget about that. What are the weeklies going to do? Well, this weekly of the Dow is absolutely with a down arrow in a sell mode right now. Unless there's a spectacular turnaround by day's end, we're at 23,548, down 311. And unless there's just an unbelievable turnaround to the upside, I'm not sure what can do it. But if there is, that turnaround has to get you back, not to today's high, not to yesterday's close, but at least to today's high. That's going to be really tough to do. But I'm really worried about my monthly charts. The monthly charts seem to be headed towards peak E's and peak E's in the Chapman wave methodology, especially in monthly charts. You just have to take them seriously. And seriously means that rallies, at least for a little while, have to be considered to be counter trend rallies. So let's go SPX. We'll do this all before the break. S&P right now is down 25, I believe, yep, 26 at 25.54. Leg B to the downside, actually testing the 200-period exponential moving average, made that H pattern. Let me just quickly show you the H pattern. Let's go to chapter 17 in my book, Introducing the Chapman Wave Methodology. Dreaded H, this pattern right here. Another one there. So this pattern where it comes down sharply, and then it makes a lowercase h by making a little arch formation. When that arch formation takes out the left side low and closes under that for 1 or 2 sessions, that's very negative, and you can see this pattern. Eventually, you might make either this h, lowercase h that goes to a lowercase m pattern, and or a V-shaped pattern. But the V-shaped pattern like this one here, you really have to go decisively above the last major peaks on the left side. In this case, you can see it didn't do that. So let's get out of this. We'll continue. So this is in the S&P daily sell mode. Weekly, it's not Friday at 4, but I can pretty much say that the technicals are deteriorating as we speak. Sell mode. Monthly chart hasn't gone to a sell signal. I have to wait for the whole month, but at this particular point, not a good action. QQQ, this is the NDX 100 trading vehicle. The power shares, look at this. Daily chart, legs C to the downside, took out the left side low. Sell mode, weekly sell mode. Monthly is a peak D. Remember, Ds are where we start in the Chapman wave. To consider that other things can happen. We don't know, but that's kind of what you have to be looking at. And now, most importantly, we're looking at QQ. Let's go to the IWM. IWM is the Russell 2000. Russell 2000 also down sharply, down 1.48 and 143.96. Broke the left side low today. That's the arch pattern, the H lowercase h. The weekly chart is in a sell mode as well. And the monthly chart, I have to say that I might be jumping the gun, but everything about this monthly chart of the iShares Russell 2000 ETF suggests there could be a peak E-top. Take this seriously. Okay, gold was down. Now it's a little bit better. It's down minus, it's unchanged at 13.19. I'm not sure yet. The gold should really have moved 3 to 4 days ago, and it hasn't. And that says to me that the dollar, DXY, let's see where that is. Yeah, that's holding very nicely. It's up 16. We've been long for about 4 or 5 days. I like the dollar as a trade. I wouldn't marry this one at this particular point. It's not an intermediate anything. It is only a short-term bounce, and we have to see until it gets to the 91.20s. If it can, then I might consider that the daily has got more upside potential. EUR-USD, this is the euro currency pair, euro-dollar, and that actually is right now down, I believe, yep, down 0.002. That made a peak. I have to call this a peak C1, C2 failure pattern. Leg B in the monthly chart, and this is an instant restart. I'm just calling it a B for now. Make it simple. At 1.221, if the euro-dollar currency pair breaks and closes on a weekly basis under 2.1, let's make it 1.2. Yeah, make it 2-1. Okay, if it closes under that on a weekly basis, that's going to be very poor action. USD JPY, this is the dollar-yen currency pair, not doing very much. In fact, it's testing the left side low. It has not done what the dollar is doing. So this is dollar-centric right now, because this is the US dollar, Japanese yen. Remember, all of these are a mix of currencies. But this one here is under the 200-period moving average in both the weekly and the monthly. Wow, at 108.36. I'm watching this closely. Can the dollar just do it by itself? We'll see soon enough. So now I want you to go to the TLT. This is really important. The TLT, which is the Lehman 20-year Treasury bond ETF, is trying to find some kind of a base in the 117.85 to 118 area. Yep, it's doing okay. We're going to watch this closely because the TBT now, I need to talk about this when we get back, but I had a question about peak Ds. I'm going to go through a whole bunch of peak Ds in charts and show you how important they are. This is a leg F to the upside in the TBT. I'll be back. Basil Chapman, Dow Jones 350.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
5,995.77. 5,995.45. Yes, the NDX. I did this the other day. There was a question about the wave counts in the. Is the NDX 100 and the QQQ, which is the PowerShares trading vehicle for the NDX 100, are they in sync? And I said, gee, I need to go through this. I had it down and I had to redo it. I just did it a few minutes ago during the break. This is a leg D and a possible peak D in the monthly chart. This is now much more serious. So the NDX 100, boy, consider that. Look, Amazon today, in the early morning, we actually went long pre-market. The Dow, just as I thought it as a trading vehicle, because I thought we were close to at least a bounce. One of the bounces that I do not like at all historically is a bounce where the VIX index is extremely high, but we don't make that culminating V-shaped bottom. But I didn't expect we would make one right now. But I was expecting that we would see some kind of a rally, and that rally would have 3 days, 5 days maybe of upside action. Well, this morning we got in pretty nicely, and then for some reason the Dow just took off, and I should have said raise the stop like I normally would do, but in this case it all happened so quickly that the Dow made a very nice gain, and then kaplop, it went all the way down. So it took us out for about a 0.8, a tiny little fraction of a loss. But that's not the point. The point is the trend we've identified as a downtrend. When the tide goes and changes, you have to stay with the tide. And that's why I've been saying, let's have very few long sides until we get some really decent. I'm not sure if I'll try that again in the Dow, maybe something else. But this is going to be very important. Look, Amazon down 58 at 1292. Leg B to the downside. There's your peak D. Amazon 1,498. Round number low, 2nd of February. Peak D, pulling back sharply. I've got it as a peak F/B in the weekly chart, but a leg E in the monthly. That's the reason why this has the potential to elongate in time, let alone price. So this is something to take in mind. It's the first time, because the weekly charts are so bad at this point. Days young, anything can happen. But at this point, that you have to consider now, you've got to move from the daily to the weekly, and almost immediately. This is very unusual. Go to the monthly charts to check them out. So let's do that. What we're looking at here is crude oil. I was asked about, what was the question? Yeah, crude oil. What do you think about, will it break below 60? It's at 59.31. Yes, it will break below 60. It's at 59.32. Well, that's that sell signal that I said. Now I think that we could go a little deeper. I was wrong thinking it was just a trade, that the weekly chart would hold in the 62 to 59, 60, 59. This is not good. So crude oil, yes. We're going to see at least the highs that were made back in. This is that V-shaped pattern, which is also the cup formation in the Chapman wave methodology. Very important. A breakout like this often comes back and tests the breakout, and that's, I would say, crude oil will test the high of the week of December the 16th, which was at 59.58. Well, I'm going to say that that is absolutely one of the techniques, and it should really test it. Of course, I can't say that now because it's down at 59.23. So just now you've got to be very careful. That's what I was saying in the last 2 days. I was wrong in saying it was a short-term position that you could take. Now it looks like it's more of an intermediate-term position. A couple of things that I'm going to talk about right now is within the context, Technical Friday. I got questions, but I also wanted to do something here. Let me just see this, and then I can get rid of it. So this is the E-mini. Okay, nice turnaround. This is the 2-minute chart. There's the 2-minute chart. Okay, so now it's a lot clearer. At this point, a new takeout of the downside below 25.50, round number low. Any trade that goes for 15 or 20 minutes below 25.50 says, oops, no time for a bounce. Any move at this particular point that says pushing at 25, 65, 25 for the E-mini, that takes you above this trend line resistance right here, above 25.78 that holds for, I'd have to say, 30 minutes, says, okay, most of the downside for the day might be done, but the fact that we went lower in the H pattern for almost all the indices in the daily chart says, whoa, just be real careful around here. Okay, now, this is what I wanted to talk about. Peak D, how important is it? Let's just run these through. Dollar INDU, the Dow goes to a peak G/C back in mid-January, squeaks along, then finally goes, the alternate count says you can't go to an H, there's no H, so it goes G/C. That's why I have the alternate counts. D is the next letter at 26,616 on the 26. It makes the top, and it has a Chapman wave 2-bar reversal, gaps down. We actually got short beautifully right there, ups round about. Give you the price now. I think it was at 26,000. I can't remember, 26,020 or something like that. Not the best price, but that gap down was so quick. And then we went all the way to 23,788, rallied, and that rally 3 days ago just took us out. I really wanted to be holding a more intermediate term type. Short didn't do it. And then this morning we've gone to the 23,615 level, and this is the weekly chart, very poor action. So peak D, Dow, ITW, I grabbed a whole bunch. Illinois Toolworks comes out with fantastic earnings, makes a high on the 29th at 179.07, peak D. Kaplop, it goes from the 179s to 156s right now. Peak D weekly, peak E monthly. Let's just keep going. CCI, there's another Cummins, very important. Oh, Crown Castle, sorry, makes a peak D, pulls back from the 114s, trading now at 102. Peak D in the weekly chart. Peak C, maybe C1, C2, I don't know yet, in the monthly. This is partly maybe the the retooling, the infrastructure. I don't know. We'll see. We'll see what happens. BK, Bank of New York. Look at this. Peak D. Way back in around about the 15th of January in the 58s. Now it's trading at 52. And I haven't finished the weekly. I did have the weekly and monthlies in peak E. So just keep going. FTX. I mean, you can just keep going. FTX, peak D daily, alternate count in the weekly. But look, went to an E in the weekly. In the 274s, trading at 229. Just Home Depot. This is a really important stock. I've got something to show my subscribers over the weekend. I can't remember if I did it last weekend, but I'll show you this weekend. Really fascinating. Peak D, 207.60 on the 29th of January. And where are we now? We're at 177, 30 points lower. That's huge. Peak F in the weekly chart. Wow, this is telling us about the home builders. Talk about home builders. We are short a home builder, Pulte Homes, from a peak D at 35.21 is the high on the 23rd. We are short from the 3.5 area. It's trading at 28.17. It's in leg D to the downside. Monthly chart of peak F, a weekly chart of peak F, monthly chart peak E. I've got to look at this. Hong Kong trading dollar HKTOW. This is the Dow Hong Kong chart. Makes a what? Makes a peak D chart, peak D top right on the 29th at that high because the numbers are different. 620 is trading at 563 on the 200 period.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So, here we go. The black chart you see right now is just populating. It's coming up. It's going to be the triple yield charts. We don't want to look at that. It's really important. Look, the TLT is up a penny. So what we need to do is look at this, what could happen for Friday. And what we're looking at right now is that for the week, we are not at the highs at this particular point in the yield, the 30-year, that's the white one, TYX, the TNX, the 10-year. We're kind of in the middle of the week's range. And at the lower end, and I've been saying the 5-year is kind of the clue for me that over the next week and a half, maybe 2 bars, we might make a peak here. And later on, either in February, late February or early March, we have another spike to the upside to scare everyone. That's another reason why I was thinking if yields pull. The tradition has been for me to always look at the markets and say, Bondi, Goldie, Dolly, and VIXI. That's the VIX index, the bonds, gold, and dollar. Those 4 can be peripheral or they can be the focal point. And at this particular point, Bondi, that's bonds, are really important because normally in markets that smash to the downside, money migrates from the volatility of equities to the so-called safety of so-called bonds, right? Safety of bonds. We haven't seen that at all. And that tells me that there's a greater tide that's going on. And that tide is that yields have an inevitability about them to drift higher. They've really shot up higher very quickly. Now I think they take a bit of a breather, and the next part doesn't have to be that high, but it's just enough to scare the market. Could come a little later. It could even come on Monday, but I'm just saying I wouldn't be surprised if we have a week of weakness in bonds. But have a look at this. This is wood, the iShares Timber and Forestry ETF. Wow, look at that. Down 53 cents at 70.47. That's a 10% move that it hasn't had in absolutely ages, since maybe March or so of 2016. This is the deepest, this is the biggest candle I've ever seen in this particular instrument. And look at this, the housing, HGX, Philadelphia Housing Index, kaplop, minus 3.5 at 315. It was at 369 just 3 weeks ago. 69 to 15, 54 points. I would say that that's a bit of a pullback. And you can't repair that just in a quick pop to the upside. It's going to take some time. So let's get back here to our story. I wanted to also talk about a bunch of questions. So the IYT, what is the IYT doing? This is the iShares, made a peak E-top at 206.73 back in mid-January, trading now at 177, 30 points, 31, yeah, almost 30 points lower. Peak E-top in the weekly chart, and a leg E that is probably a peak a peak E in the monthly, and a Chapman Wave 5. So that says to me, whoa, be a little careful here if your transportation index is starting to tank. Now, a couple of things that I want to look at here was, where are we? Yeah, okay, sure. So the SMHs led the way up. I think lead the way down. They're actually plummeting right now. They're down 94.73. Down 50, I shouldn't say plummeting. They did plummet. Today they're following through to the downside. We're still short. We're still short from the 106.50 area, 40.50 area. And right now, they're down at 94.78, about to hit the 93.29 200-period moving average over the coming week. And that's going to be, look, the weekly chart, peak E. This is serious stuff. Peak D in the daily. Oh. And a leg E, probably a peak E in the monthly. I have to take this one very seriously. And now let's look at another question I had was, Gator, I don't know what to say about the Qs. I've tried to count it every which way. My monthly chart is, unless I take a phantom peak, which I might because the NDX 100, which is the root, is at a D. So yeah, I'm going to have to make some changes. Unusual, but they need to be made. Question about the RUT, IWM, what's the question? Can you eliminate can you? Yes, absolutely. Sorry, I should have done that. Actually, I was going to do that about 3 days ago, and I completely forgot. This is a leg E to the upside, an alternate count, taking you to a leg E in the RUT weekly chart, the Russell 2000, and that says serious E potential in the monthly chart, and an F was made in the daily. Yeah, in Chapman Wave methodology, I just have to take these things for what they are. And the time frames, when I look at those 3 time frames, we're now into the monthlies. We've gone quickly from the daily, boom, weekly. That means we now have no choice but to look at the monthly charts. Next thing I wanted to show you is, what was the question? Yes. Yeah. Dow was up 349, then minus 50. Is this bear market action? Absolutely, it's bear market action. And as I say, the VIX index for me was a clue to say that that unusual spiral to 50.30 says to me that I was expecting this to meander, the VIX not to make the new high, and then sometime in 2 weeks' time, or maybe 3 weeks' time, there's just this flurry of bad news, and boom, we go even higher, or we retested internal low for the residual low. I can't talk about it right now, just to say the VIX is very strong at 35.63. Now, if we were, if with, who was calling the other day? Was it, who called me 2 days ago? Was it 2 days ago? Yesterday. No. Who called me yesterday? Oh, Charlie in Framingham, about the TVIX. And what I said is, if it closes at the low of the day, please take something off. And then just try to use a stop. Well, now we went all the way to 14.30. Yesterday's high was 13.61. Today's low is 13. It's trading right now 13.26. Hasn't taken out yesterday's high yet. So this is really interesting action. So Charlie, if you're still holding, I still would have the same thing. I'd say just have a raised stop. And if this closes at the low of, if this closes at the high of the day, this time I'm going to say to you, I don't know what's going to happen over the weekend. This could be a really bad opening on Monday. That could scream to the upside. The TVIX could go actually into the 17s if that's the case. So this is something now you have to, you're on your own. You have to monitor it. I would still say, a gift like this means take a little bit, just reward yourself by being good. And then you can still keep, if you can keep enough, that's great. So that was there. And I wanted to go to the question I had earlier, which was a good question. The IYR. Yeah, I haven't looked at that for a little while. The IYR is the iShares Dow Jones US REITs index, is the commercial realty, made an unusual, almost like a single leg F failure pattern, the iShares. And look at this, it trades in the 85s. Now it's at 71, made a peak. Yeah, I've never seen this pattern. I've never seen. It goes to an F, pulls back sharply, doesn't take out the left side low, and then has an inside A, peak A, peak B, peak C, peak D, peak E, and then plummets all below the previous. I must make a note of this. Well, I remember, I hope I remember. The daily chart is 71.81, still looks very weak. Monthly chart is sell mode. Wow, just be careful of the REITs, the IYR. Yeah, just be careful. Okay, we're going to go, when we get back, we're going to go to Arnold in Laguna Hills, California. I'll be right back, Arnold. Hold on.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, Basil Chapman, Tiger This Hour. Dow's down 350, S&P's down 33. And got Arnold in Laguna Hills, California. Hi Arnold, how are you?
I'm kind of shaken, Basil, to tell you the truth. This is an amazing last 6-7 days in the market, if not longer, a little bit longer.
Yeah.
I wanted to ask, how, first of all, the psychology of dealing with this kind of a drop if you're still long. Because I use a trading system that I've developed, and it's worked fine, but it's now coming apart based upon what you just said previously a few minutes ago, that I look to confirm a reversal in a call based upon the IEI and the IEF, the 3 to 7 year treasuries and the 7 to 10 year treasuries, and they're not moving up like they would usually do in a very down, depressed market like we have. So it's throwing all my signals off, and I can't go to a short or a down move given my system without those bonds moving up. And so I'm kind of stuck. I'm just wondering what your feelings are about this and where you see the market moving, if we are going to be getting any kind of a bounce soon, or is it just straight down from here?
I think what you've pinpointed is really an aberration that we just every once in a while. For instance, I was listening to Think or Swim just a short while ago before my show as I was preparing, and I was doing some trading and all that. But I heard, I think it was Kevin, who said the relationship between the dollar and gold, and he was talking about it as a relationship that you've got to respect. Well, I've done a lot of work with the relationship between dollar and gold, and my conclusion was twofold. One is that majority of the time there's a mirror image in trend, not percentage, but in trend. But every once in a while, for a couple of weeks, maybe 4, even 6 weeks of the year, you could get a divergence between the two. So I do kind of concur with what Kevin was saying, but I also say that there's those moments where you've got to be aware that it perhaps is not going to happen. So there's another thing that I'm looking at this and I'm saying, wow, in all this move down, normally you'd be hearing me saying TLT should be moving up if the market is going down. But it didn't do that from almost the beginning of this move. And one of the reasons, and that's the reason why almost every day or every other day, I've been showing my triple yield chart to say, based on this chart, yields are going to go higher. This is a weekly chart, and we're only in leg C in the weekly chart of the 30-year. We're only in leg C in the 5. It's probably peak C, so it's a one peak ahead of all the others, and one behind, I should say. And you've got D already, leg D in the 10-year. So that's suggesting to me that you will be getting some kind of high, just a short period of yields pulling back. And then for my work, I would have to go with it saying that's what it means, that it's going to go higher. But at the same time, look at the Wood iShares Global Timber and Forestry ETF and the Philadelphia Housing Index. That's not Philadelphia Housing. It's it's the index that's in Philadelphia Housing Index. And that is just suggesting very strong, both of them are suggesting that yields are kind of getting in the way of the sanguine situation you had with anything that was yield related. So I have to say to you, there are times when our hypothesis or even our modus operandi diverge. And when that happens, if you recognize it quick enough, you're able to ameliorate some of the negativity by being a little bit flexible and saying, all right, I'm not sure, I better alleviate some of the problems that could be unfolding if I stick with this particular thesis and it's wrong. So I'm going to say to you, we're getting very close in the IEF, which is really what you called about, which is the iShares 7 and 10-year Treasury CD ETF. It's made an arch formation from a peak E in the weekly. I'll just squeeze it a little bit so people can see what's happened. But I have to be very nervous because this has the characteristic that says, wow, if there's a decisive failure below the left side low, which is the low of the 16th of December at 103.43, and it's trading at 102.68 right now, it's up 28 cents, but it just made a lower low yesterday. If it breaks decisively into the 101s, then you're testing the monthly downtrend support line. So this is what I'm going to say. Now, what's really difficult is with the market at 26,600 and now trading at 23,400, you've got yourself 3,000 points down. Is this exactly where you suddenly say, okay, I'm wrong, I must get out of everything? There should be some kind of a rally soon. My biggest fear is that I know the way this works from my own experience. What looks like a horrible situation today, in 3 days' time, you're praying that you could just get back to where it was 3 days ago. So I'm just going to say to you, one of the things that I would do is I would raise a little bit of cash, even if it means just a little bit of cash, just to make you feel comfortable that you have some liquidity, that you're not, fully invested. And that's what I think you're thinking right now, right? What can I do to ameliorate some of the damage? Is that correct?
Well, to a certain degree, or just we've seen, if we've seen the bulk of the damage occur, and we're going to get a rally, I would rather remain fully invested for that rally, because then you start selling out at the wrong time, and you're subject to taking a full hit on the way down and compromising your move on the way up because you've reduced your position. That's the dilemma.
And not only that, psychologically, you're behind the 8 ball because you are doing everything that you normally would say would be wrong.
Yeah,
right.
Exactly.
So,
exactly right.
So
do I have time for one more question?
Yes, question away.
Okay. So this is the psychology of all this, and I want to get your opinion on whether you think there's something behind the scenes going on like this. The long knives are out for the president from every direction, it seems. And since he put himself out there boasting how well the market has done through his election, is there something going on now that we're not aware of that is possibly manipulating the market results just to throw another dart at him at the expense of all the investors? What do you
Okay.
think about that?
So now I've been around long enough to have heard all the conspiracy theories. When I remember my wife and I tuning into a program when we first got here way back in the early 70s, and there was this program from California. I think it was even called conspiracy theories, and our minds, we came from South Africa, so it was just mind-blowing hearing what's even spoken, let alone thought. So I've been through all the different conspiracy theories. I tell you what is going on. I always talk about this in terms of option markets, or when we used to have program selling or program buying. It's the nudge factor. And what I would say is this is the opportunity in that nudge factor for some forces to accelerate whatever they can if they want the president to look very poor. But I'm going to talk about that technically. Can you hold on?
Sure.
Okay, we've got one more segment coming up, folks. Dow's down 400, S&P's down 39. We'll be right.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. Last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks, we're back. So, Arnold, I'm going to make this real simple. On the way up, and let's face it, thousands and thousands of points on the way up, if there was a conspiracy theory, those people would have been able to stop that dead in its tracks. On the way down, it's just opportunity to exacerbate. Yeah, people can do that. I happen to have a different point of view. I'm looking at the technicals. I got sell signals from the technicals. I'm getting sell signals in the weekly chart from the technicals. There are so many other things going on. Yes, keep it as a background theory, but I would not rest any. I wouldn't even trade based on that. because you don't know exactly until after the fact. So I'm just going to say to you, keep it in mind that there's something going on, but mostly let's just look at the charts. And the charts are suggesting that at 102-ish, the IEF, the iShares 7 to 10-year Treasury CD, is looking to try to have a bounce, but it's that weekly chart, and I'll probably talk a little bit more about it. This is the second week where it hasn't closed above the low that was really important back in the week of the, was that December or January? That was December the 16th at 103.43. If it cannot close by next week above 103.43, then the IEF is going to go lower. That's just the way I'm looking at it. I hope that helps you a little bit.
It did. It was brilliant commentary, and I thank you for taking all that time, Basil. I enjoy your show. Thank you.
Thank you very much. And I will go a little bit more on Monday because a lot of people are in the same situation, and we'll talk about it because we must be very practical now. Hey, thanks so much for calling. I appreciate it. Have a good weekend, Arnold.
Likewise.
So let's do this, folks. The Dow has taken, let me just go to the chart right here. This is Chapman Wave 5, and I'm not sure where this is going to stop just at this particular point, because we have gone low enough for me to start eyeing. I thought it would be later. Maybe it's going to be sooner, but the 23,089 level, let's call it 23,200 period moving average in the daily chart. The weekly chart is just straight down. I don't know how I can call this anything but a sell mode. And it's really the monthly chart that's got me worried. So I'm just saying, look, a lot of people are in the same situation as Arnold, or many people that have a position. You're thinking you don't want to get out now. My thinking always is, look, take a little bit off so at least gives you comfort. Big deal. So the market turns around and rallies and makes you look silly. At least you've got some cash. What happens if on Tuesday or Wednesday you're dying for the Dow to get back to 23,000?
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.